At Pareto Securities annual energy conference, we have a lot of E&P companies presenting. One of them are Swedish Lundin Energy and the CEO Nick Walker. Welcome.
Well, good morning.
And also with us we have Pareto Securities oil and energy analyst Tom Erik Kristiansen.
Thank you.
Yeah.
So let's start this discussion, Nick, I think with one question just to kind of look at the history a little. I remember someone 2 years ago told me that it would have been a better investment to invest in Lundin Energy than Apple at the time of the IPO of both companies today. Can you say something about what has been achieved this far for shareholders and how value has been created?
Yeah, I mean, the company started actually 20 years ago and has over the period of time been invested in a number of places, but focused on Norway 15 years ago. And now we've divested other assets and focused our business on Norway. And from raising $50 million of equity in 2001, we built a business with $9 billion of market cap today. And along the way, delivering $4 billion to shareholders. So the company's created huge value, focused here on Norway, and we have a great high quality business today, continuing to deliver growth and value in Norway.
Yeah, and for our viewers, you are mostly based, as you said, in Norway. What are the main assets that you're currently producing?
Yeah, well, we're really simple business to understand, actually. We've got two big assets. First of all, a material interest, 20% in the giant Johan Sverdrup field, which came online a couple of years ago, and phase 2 is going to come online next year, and I think it's going to drive a lot of our growth. And then we've got we have our flagship operated asset, the Greater Edvard Grieg area, which started off just as the Edvard Grieg facility, but is expanded to a number of subsea tiebacks, and I think there's lots more opportunity there. We've grown reserves materially over double from original sanction, and we have the potential to double again. And I'm excited by actually all of that area to continue to provide growth to the company.
One follow-up question there. With oil prices now about $70 per barrel, can you just talk a bit about the economics of especially Johan Sverdrup, of course, hugely important to Norway as well?
Yeah.
And then the portfolio as a whole, kind of some key numbers on the cost and what you expect to produce?
I think one of the unique characteristics of Lundin Energy is we have three very high-quality, world-class assets. The free cash flow break-even for our business is $10 a barrel, which means that anything above $10 we're delivering free cash flow to fund pay down debt or fund dividends. And so we're very protected on the downside to low prices, which we saw last year, but this year with more than $70 a barrel today, we're delivering strong free cash flow. So it allows us to fund a growing and material dividend. It allows us to fund growth, and it allows us to pay down debt, and we can do all three of those things with the quality of our business that we have today. So, it allows us to continue to fund growth into the future too.
And how should people think about that? We started this year with oil at 50. Now we are about 70, so obviously you have a much greater cash flow than what you probably planned for. Does that is the main purpose with that short term to pay down debt, or looking at increasing investments or dividends?
I think it's balancing all of those, and the beauty of our business, of the quality, even in the downturn, we're able to fund investments and growth, and on the upside, we're able, of course, to do more. But we will pay down debt. Our aim is to grow our dividends, and our aim is to continue to grow and build the business. And I think the growth is sort of limited by opportunity and. More than anything, actually, but we seek value accretive opportunities, whether they be exploration or acquisitions, and we will fund. We have the capacity to fund basically anything we can come up with.
Tom Erik, you of course have analyst coverage on Lundin Energy, and in an updated E&P sector outlook, you lifted Lundin Energy as one of your favorites. Why is the stock so attractive at today's levels?
I think it's unquestionably probably Europe's most resilient oil business at the moment. It is also the one with the lowest emissions and the best track record of value creation if you look at the long term. So I think those combinations is what we found very exciting about Lundin Energy, and the dividend story as well, of course, that the business is throwing off a lot of cash. So one point to maybe talk a bit more about, Nick, is decarbonization, basically, of the business. And you put out some new targets now, or basically move them forward. How has that process been internally? I think Earlier we talked about it. The first target was 2030, carbon neutral production. And where are you now, and how are you working to achieve that?
Yeah, I mean, we set out 2030. I think in Capital Markets Day we announced this year 2025, and this morning we announced that we would become carbon neutral from our operations in 2023. And I think for us, when we set a target, we want to deliver it. So we've taken some time stepping into this, but I think it's supported by three key things. We're doing real action around reducing emissions through powering our business from shore with electrification. So by the end of 2023, over 95% of our business will be produced with electricity provided from shore. Of course, we're using a lot of electricity, so we've invested into renewables to balance that. We've invested into 3 projects, one here in Norway, a Swedish project, a Finnish project, and one of them's online, the other one comes online shortly. And so by actually 2023, 100% of the power we use will be our own generated renewable power. And then we've got some residual emissions that we can't reduce. So we've offset that with funding and investments into natural carbon capture reforestation projects. And the key for us is quality, being able to see the trees that we plant and feel confident that we are actually reducing the emissions. So when you put that together, we're able to get to 2023 carbon neutrality, but also we're in the same time frame, we're reducing absolute emissions to the atmosphere by 50%. So, and I think this is really important. I think it makes us investable long term, and I think it makes us relevant long term, and creates a lot of value for the business.
Thank you. And speaking of the long term, maybe ending with a bit of a difficult question here. You talked about the upsides in the current portfolio. Yeah. At the same time, we know that Lundin Energy has historically created tremendous value with a drill bit on the exploration side. Do you think the majority of future value creation will come from increasing resources and reserves in the existing base, or new exploration wells?
I think it's all of those things. We created the business with exploration, but you see with all the assets they've grown materially, and I think there's still a lot more to come. But I think exploration plays a part, and we have a material exploration program. It's less predictable. But when you look at, we believe we can continue to create value and add resources. I think we have an exciting portfolio. But if you look at the history, over the last 5 years, we've had a 150% resource replacement ratio. It means that we've added 1.5 barrels for every barrel we produced during that period of time. So growing the business. I know the history is no measure of the future, but I think we can continue to keep doing it. And I think what we'll see is the key assets will grow. I think we'll see our exploration round those assets deliver value, and hopefully our bigger exploration, more risky stuff will deliver some value too.
Thank you.
That's great. Nick Walker of Lundin Energy and Tom Erik Kristiansen of Pareto, thank you so much for joining our studio.
A pleasure. Thank you very much.
Thank you.